was an eventful day of trade, more importantly because we were talking for the last few sessions about there needs to be a meaningful reversal for the uptrend that we were seeing in the market to get corrected, and that's probably happened because yesterday we were down, today we down close to 1%, ended at the lowest point of the day, and lots of key indices going down in the session. Before we talk about what's really happening, I mean the market pretty much says it all. Quickly tell you the voices that you will hear on the show today. Anil Singhvi, Chairman of ICAN Investment Advisors. Sandeep Wagle on the charts to give us a sense of how the charts are looking, and we'll also be joined by Nipun Mehta, founder and CEO of Blue Ocean Capital Advisors. Start off with you, Anil. What's the view on the markets now? I mean, there's a lot of water that has flown from the last time that we spoke. But how do you view the markets currently?
I still feel that fundamentally, I think India still doesn't have a good equity story. So I think going forward, we will see a lot of corrections coming in. And you have seen, I mean, I'm not getting fooled by Sensex or Nifty, but look at the mid cap and look at the small cap. I think the kind of massacre which we have seen, and most people, most watchers of your channel would be investing into those ideas, and they've been completely massacred. So I think the local investors' confidence in stock market seem to be at the lowest level.
Sandeep, that's the point really. In today's session, more importantly, with the way some of the rate sensitives fell down in trade, particularly the banking names. And how do the charts look now? Bank Nifty corrected almost 281 points or 250 points. Nifty correcting over 1%. Are we set for more downside?
I think so, Neeraj. I see another 200 points fall in the Bank Nifty. I think OBC is looking the weakest. Most of the banks, the Bank of Baroda and ICICI Bank, even a State Bank which was holding out over the last so many sessions, is by end of the day was looking set for a sell-off tomorrow. So I think 2-4% downside in most of the banks, I think led by OBC.
Nipun, some of the heavyweights which are holding the index up the last few sessions, I mean IT was doing that, and that started to give way now, buckling under pressure. The market breadth has gone for a toss as well. But what about some of the bellwethers? I mean HUL held out today for sure. But if there is more pressure on the indices, do you think these will start to correct because they are not trading at exactly cheap valuations?
Sure, they could just correct simply because of the sheer weight of the downward momentum that is there. But these are really defensives, and we don't believe there should be a significant correction happening. Yes, valuations are stretched, but you go back 3 or 4 months when markets were in a corrective mode. And you did still see all these defensives, particularly the FMCG stocks, selectively some of the IT stocks which really held up, simply given the fact that there needed to be some avenue where some of the institutions needed to park their funds. Yes, I think despite the stretched valuations, you could see them not falling as much as what the market could fall.
Anil, what about the auto sector? Do you think that there will be further slowdown in this space?
I think you're very right. Automobile will have still a lot of challenges on their hand, and demand doesn't seem to be picking up, and I don't think this budget has done any favor because we had at least SUVs which was doing well last year, and we seem to, and I don't know what this tinkering from 27 to 30% when sentiment itself is low. This 3% is really not going to generate huge revenue, but definitely it has dampened the whole mood about buying even SUVs. So somewhere I think the whole greed of the revenue generation seem to be killing some spot of the growth in the automobile sector, which is rather unfortunate. I think we should be seeing more the growth than looking at the revenue numbers.
The other newsmaker of the week, Nipun, or the day rather, has to be Jet, and it ended in the green. In fact, was up close to 3.5% at a point of time, and probably inching closer to a deal. I mean, they're taking some baby steps with regards to separate things happening. First the London slots, now talk about the Brussels slots being sold out as well. Board meet on March 23rd, maybe an OFS after the deal is done. What's the call here? I mean, we are purely playing it from a perspective of a deal, but do you still think there is some merit in being invested in Jet Airways, or probably even making an investment in Jet Airways?
It might still make sense, Neeraj, given the fact that yes, probably there is gradual strengthening of the balance sheet that you are apparently seeing as far as Jet Airways is concerned even before the transaction. Hopefully the transaction will go through in its entirety in terms of the extent of stake that Etihad does take. But really, I think disinvesting some of the assets or some of the higher liabilities that Jet is doing in any case is definitely ensuring that this infusion of funds, along with the additional infusion that actually comes in when Etihad takes its stake is something that could benefit the company and make it stronger financially. So I think there could still be a case as and when the actual transaction happens, or before the transaction actually gets announced, there could be that rally that could just happen.
We'll talk more about the banking stocks as well, but before we take that break, Sandeep, just one quick word on Jet Airways, 1% higher in trade. This is the fourth day when Jet has ended in the green. Could there be more upsides, keeping in mind the market risk as well?
This is a clearly news-based move that is happening, and definitely there could be more upside. But one thing I would say that it's a different story had you bought it at 500, 520 levels over the last few weeks or so when it fell, or maybe lower than that. Then one can hold on for a target of 620, which is the prior swing high around that. But to buy at this level and expect that a lot of things can go wrong, so I would not be very, very keen to do that. But yes, if you are bought in around 500 levels, one can hold on for 615, 620, and on an outer side 630, 640.
Anil, just coming to you, what's the view on banking stocks? I mean, they took a pasting today, but what happens next?
My vote is still for the private banks. I think they are a little better managed than the PSUs on that. But right now the banking sector per se is going through a little bit of a pressure because as I said that the deposit growth rate has been one of the lowest in last several years. So and right now we don't have much of demand from the corporate sector or from the economy, and in that right now they are seeing some bit of a tight liquidity. So when demand opens up, really they will have to fend themselves in terms of getting deposits, and they will have to increase the rates. So there will be a little bit of a compression on their net interest margins. But going forward, I think couple of private banks like IndusInd, Axis, I think they are going to do much better than rest other sectors or other companies.
Anil, can't really not have a discussion with you on cement. So I just want to come back to you and talk about this space, because we talk about defenses, talk about sectors which might stay hold out rather, and cement could be one of them. Are you still positive? Are you still bullish on even a Madras Cement that we spoke about earlier?
Yes, very much. As I mentioned last time also, and I think this is one of the very few stocks which has done reasonably well in last couple of months, when you have seen most other cement sector plays and other companies haven't done, or stocks haven't done so well. Going forward, from demand supply point of view, demand is of course not really picking up because I think it's a reflective of where the economy is. I'm not a great bull on Indian economy in any case. So cement is going to have a little bit of a pressure on demand side, but fortunately supply side also seem to be now at a very, very low growth. So I think demand supply more or less match. Cost side pressures are really minimal. So I see still the cement companies having a reasonable EBITDA margins. And there is, as I mentioned last time also, there is an asset and earning play in cement, which is very rare with most other commodity plays where you have asset and earnings play.
Actually, very quickly, Anil, are you also bullish on Dalmia Cement? You were bullish on the stock earlier.
Of course, because last time I mentioned about that this is the one play which is definitely much below its potential in terms of both earning and asset play. So Dalmia Cement, and again there is one more company in the same management is OCL. I think both are very, very good.
Maybe not the most liquid stocks, but Anil Singhvi, a veteran, likes these stocks, so watch out for them. Nipun, the other newsmaker of the mid-cap space today were the road construction companies, and it was surprising to see that on a day when the large caps and mid-caps corrected with a vengeance, they were holding out. Probably got to do with the delinking of the forest and the environmental clearance, and that had some of these companies up in the green. There are some baby steps being taken to improve the scenario in this pocket. Do you like it at all?
Well, we've liked this space for a long time, but really clearly coming out of government inactivity, you're really seeing underperformance from this sector, not just in terms of stock market underperformance, which has been around, which has underperformed, this space has underperformed for close to now 3 to 4 years now, but also underperformance in terms of actual execution of projects. If there is clearly that upward momentum that the government shows, or activity levels that the government shows in terms of execution of these projects, there could be a significant the benefit that a lot of these companies would have in terms of at least the top line growth that is there. The bottom line growth still could continue to be tight given the fact that there are extremely high interest costs that almost all of them are incurring, and that's probably impacting their EBITDA levels considerably. So I think clearly the space looks good, but a lot would depend on how the government supports this entire space. In terms of valuations, clearly virtually all of them going at the price to earnings multiples of anywhere from 2.5 levels going up to just about 6 to 7 times. So really I think this entire space subject to government approvals filled with a lot of opportunities if you look at it from a 2 to 3 year time frame.
There are tons of stocks to talk about as well, but Sandeep, just wondering, get your views on some of these stocks. Is it worth taking a punt while the market is at risk? I mean, at least the chart showing that. Would you take a buy, a contrarian buy that in an IRB or a GVK Power or ILFS Transportation?
Not at this point in time. I would let the Nifty fall by 40-50 points. Then in case it consolidates at that point, if they still show strength, possibly I would take it, but only very clearly as a trade. I don't want to talk of an IRB at 122 and talk of 150, 160. I would be probably talking of 132 or so. So a 5 rupee stop loss and a 7, 8, 10 rupee target, that kind of a trade, yes.
Nipun, the other news that came out was about the whole coal space. I mean, we heard today about Indonesia saying that they will gradually phase out coal exports in a phased manner, of course, but will do that. The Supreme Court yesterday said that it may consider scrapping of all the coal mines allocated from 2004 to 2009. Do you think power, despite all the necessity for the country, is in a bit of a bad spot and other prices already pricing in all of those negatives?
To a degree, a lot of that is priced in, Neeraj. I think for any industry, any business, if the raw material itself is a question mark, obviously they're going to face a lot of challenges. Clearly the opportunity is there because India is a seriously power deficient country that is there. So it's just possible that a lot of them would need to restructure their businesses in terms of how they look at this raw material, how they source this raw material, from which countries, at what pricing. But clearly I think not just is greater linkage required as far as fuel is concerned, as far as raw material is concerned, but also probably tariff increase is something that a lot of them need to reconsider, or the government needs to help them or support them. But more importantly, I think the restructuring in terms of distribution companies, in terms of distribution losses that are there, that's where the government decision making is key in order to ensure that the power sector is probably strengthened a lot more in terms of its profitability. So it's not just probably the coal linkages that is there, but I think clearly the distribution losses that need to be addressed more seriously by the government in order to ensure that the entire sector gets the kind of prop that's required at a time when probably a huge additional power requirement is required for the country.
To tomorrow's trades and speak about some specific names in this session today. And firstly, get in a word from the dealing rooms. I'll first get in Gargi Parikh to speak about a Bajaj Auto, because that's a common stock with Sandeep as well. Sandeep has a sell there. We'll come to that. But Gargi, why Bajaj Auto?
Well, if you look at the BSE Auto Index, that has been declining. We've seen a 1.5% cut coming in. It's a third straight day of decline coming in. Most dealers and analysts we spoke to expect further weakness in the auto sector itself, and Bajaj Auto being the classic case, there 3% decline already there. Some weakness expected to continue going forward.
Okay, thanks a lot for that, Gargi. And Sandeep, which is why I'll come to you. You have a sell call on a Bajaj Auto, a sell call on an ONGC.
Well, both of these stocks have given a very clear breakdown today. And Bajaj Auto, I would talk of a 70-80 rupees the downside from the current levels. At 1900, it has broken a very, very crucial support. So I see this stock going down, maybe not tomorrow, but over the next few trading sessions to 1830, 1836 is the target that I have given, and I would play it with a stop loss of 1925 or so. Same thing for ONGC. I would play for a downside target of 4 to 5% from the current levels.
Okay. I'll just come back to you, Sandeep. I have one more question for you, but before that I'll go to Anil. Anil, speaking of IT, because some of these stocks fared well today, the likes of Mahindra Satyam, which very much almost hit the new high today. But what about Mindtree? You've liked that stock before. Do you still like it?
I like Mindtree, yes. I think out of mid-cap IT ideas, this is one of the best plays, and it has really done extremely well if you look at last 1.5-2 years performance, I don't think any other IT company would have really done the way Mindtree has done. So very well managed, very focused company. It has its own challenges, but I think going forward this will be one of the best plays in India.
Nipun, you don't normally do this, but the market is in a bit of a tizzy. If somebody is looking to park in maybe 5, 10, 15, 20,000 bucks over a period of 1.5 years, is there anything that you would have scanned that you believe is a safe thing to do in the current circumstances?
Well, I think the safer bet for that kind of time frame would continue to be banking, the private sector banks space that is there. And one has seen a fair amount of outperformance in this space. One has seen a limited downside. One has seen really improved profitability and a fairly robust asset quality that is there. So I would look at maybe an Axis Bank or an ICICI Bank even at these levels for that kind of a time frame for ensuring that finds place in the portfolio.
Okay, so that's valuable advice from Nipun Mehta. But I'm glad you mentioned banking, because Sandeep, I was going to come to you. For a sector that looked distinctly weak today, the bank nifty was down. A lot of banks covered in the closing show as well. You do not have a banking stock as a sell today, buy tomorrow idea?
Neeraj, we definitely have. I have just not covered it in this show. I do have a sell in OBC, we have a sell in Bank of Baroda, but they have been sold at higher levels, and ICICI Bank is sold at some 96 levels, 1096 levels, and it is down by some 10 rupees. So any of these banks, I see a 3 to 4% downside from the closing level. So yes, we have sell in the banking space as well.
Okay, those are Sandeep Wagle's recommendations. Nipun Mehta, Sandeep Wagle, Anil Singhvi. Gentlemen, thanks so much for taking the time out and joining me on this show.